What's up, traders? Welcome to in this course. Whenever you read or watch a market analysis report, you'll always hear something like, "This stock is about to break out. Anticipate a breakout here on this currency pair. This crypto coin has broken out, hold." Sounds familiar? Now, of course, reading those breakout calls encourages you to enter a trade or perhaps gives you the confidence to hold a trade. But here's what you're missing out, buddy. Those calls tell you when to buy, but often don't teach you when to sell. So, when exactly should you enter when it comes to trading breakouts? How should you manage the trade? When should I take profits? Don't worry if you don't know the answer to some of those questions, my friend. Because in this video, I will teach you what there is to know about trading breakouts so that not only you would know when to enter them, but also when to exit them. Sounds good? Then let's get started. Trading breakouts, what is it and how does it work? To put it simply, breakouts are similar to opening a pack of Pringles. Those delicious chips are sealed and trapped for a few months waiting for you to open and eat them. Breakouts are like being the first one in line when the building opens. You're the first one to explore the whole area. And it's the same in trading. Trading breakouts is capturing the price as it opens up from its range waiting for you to eat those potential profits. And trading breakouts are being the first in line to enter the move as the market potentially makes a new swing. Makes sense? In other words, a breakout happens when a certain market is transitioning to a new market condition. Now, I know that I've only shown you one type of trading breakouts, which is this. A pullback within a trend is followed by a breakout. However, did you know that there are many other types of breakouts out there? There are even types of breakouts that let you predict breakouts before they even happen. If you want to know what they are, then keep on watching. The secret to trading breakouts. Trading breakouts can come in different forms such as 1. Trend continuation breakouts, 2. Trend line breakouts, 3. Volatility breakouts. Let me share them with you. Boy, you're in for a treat. Trend continuation breakouts. This one's easy as you've already seen this in the previous section. Basically, you want to make sure that you have a valid trend going on. How do we know if it's a valid trend? Easy. You can use the 200-period moving average to assist you. If the price is above the 200-period moving average, then it makes sense for you to look for breakouts towards the upside. And it's the opposite when the price is below the 200-period moving average. And by the way, whether you want to use the 190 MA, 150 MA, or 112 MA, it doesn't matter. What matters is that you're using a long-term moving average period to identify trends. Cool. Let's move on. Trend line breakouts. Here comes the interesting part. Because when it comes to trading breakouts with trend lines, we are looking for trend reversals here. That's right. Not trend continuations, but trend reversals. Let me teach you how. Step 1, draw a trend line with 2 valid touches. Step 2, wait for the price to make a strong close below the trend line. Stay tuned as I will teach you when to enter these types of breakouts later. At this point you're probably thinking, wait, that's now how you use a trend line. Trend lines are meant to be used to capture a trend. And you're right. Trend lines are often used for you to hop into an existing trend. However, you'd be surprised how common trend line breakout reversals are on your chart. If you're enjoy from this video, please like video and subscribe to my channel so you don't miss the next tutorials. If you are looking for the best user-friendly and reliable brokers to start a trading, in the description below the video, I have put the link of some famous and reliable brokers for you. You can open an account in any of them for free right now. And then create a free demo account with virtual money and familiarize yourself with the environment of the trading platform and practice. Note that these brokers do not accept users from Canada and the United States. Now let's go back to continue tutorial. Volatility breakouts. Now, just in case you've no idea what volatility is, it's simply categorized into two things. One, low volatility market, price movement is still. Two, high volatility market, price movement is wild. Let me show you what I mean. Now there will be a lot of times when you can't exactly determine whether the price on your chart is a high or low volatility market. So, what's the solution? Use the average true range indicator, of course. Simply put, the ATR indicator is like an X-ray vision when it comes to figuring out volatility. I used the 20-period average true range with the SMA calculation. Okay, so, when it comes to trading breakouts, how do we find it here? Don't worry. I'll tell you, and it's this. The longer the market ranges, the harder it breaks out. Repeat after me. The longer it ranges, the harder it breaks out. This is important. You better make sure you remember it. So, the next time you see that the ATR indicator is starting to quieten than usual, prepare to look for entry opportunities in case the price breaks out from its highs or lows. Sounds good? But now that you're equipped with what the different types of breakouts are there, let's now dive into more technical stuff to trading breakouts. Shall we? How to enter trades when it comes to trading breakouts. Let's put things in perspective. There are three types of breakouts that I've just discussed with you. 1. Trend continuation breakouts. 2. Trend line breakouts. 3. Volatility breakouts. The next step to identify now is, how do you exactly enter them? Do you wait for a candle close? Do you place a stop order? Do you wait for the best market session? Not to worry, buddy. That's what we'll get into now. But before I start, here are two questions to get out of the way first. What time frame do I use to trade? The truth is that there's no absolute answer to this. Given that the market is liquid, you can apply these concepts in any time frame and most markets. So, choose a time frame that fits your lifestyle. Choose a market where you know how to apply risk management correctly. All good. Do I wait for a candle close or do I place a limit or stop order? After using these concepts for so many years, here's what I suggest. Wait for a candle close. You see, when dealing with breakouts, there's no doubt that false breakouts happen from time to time. And it looks something like this. So, waiting for a candle close won't eliminate it, but it sure does help you avoid most of it. Nonetheless. Still with me? Then let's get started. 1. Trend continuation breakouts. As long as you're in a valid trend, you'll find an abundance of entry setups. So, how do we exactly enter a trade with a trend continuation breakout? Easy, simply wait for the candle to close above the pullback. Then enter at the next candle open. Next. 2. Trend line breakouts. Trend line breakouts can be a bit tricky. Because if you recall, you must take trend line breakouts when it makes a large-bodied candle breakout. It means that your trend line breakout must look like this. And not this. So again, once you have a large-bodied candle breakout, simply enter at the next candle open. Last but not least. 3. Volatility breakouts. Remember the last example I showed you? I'm sure you might be wondering, why are there two entry areas? Does that mean I will enter the trade twice? No, my friend. It simply means that we don't know which direction the volatility will expand into. That's why we would need to wait and see. So, if the volatility manages to expand to the upside and it makes a large-bodied candle close from its highs, then you simply enter your trade at the next candle open. An interesting setup, am I right? Now, there's no point in learning how to enter your trades without knowing when to exit them, right? So, in this last section, I will dedicate my time to equipping you with tools that will help you manage your rewards. So, let's move on. Trading breakouts, how to exit your trades and take profits. Today, you've learned 3 trading concepts so far. Trend continuation breakouts, trend line breakouts, volatility breakouts. So, to complete all of these setups to add to your trading arsenal, I will teach you how exactly you can exit your trades so that not only you can apply it to these setups, but other setups outside of this guide as well. Because after all, trading breakouts is different from just entering breakouts. Does that sound like a good deal? Great. So here are 2 ways how you can exit your trades for a profit. Trailing stop loss. Having a trailing stop loss simply means that you let the market dictate when you should exit your trade. So, if the trend goes on for a long time, do your profits. Now, how do you trail your stop loss? The simplest way to do it is by using a moving average and waiting for the price to close beyond it before you exit your trade. Here's an example of a trend continuation breakout setup and a trend line breakout setup. Now tell me, what do you notice in the 2 examples I gave you? That's right. The moving average period is different. Because if you're going to ask now, what's the best moving average period for trailing stop loss? The answer is that it depends on the type of moves you want to capture, no, not dance moves. So, if you want to capture short-term moves, use 10 to 20 period moving average. Medium-term moves, use the 50 to 100 period moving average. Long-term moves, use 100 to 200 period moving average. Makes sense? So, if you want to capture medium-term moves after entering a breakout, for example, then feel free to use a 69 period moving average. Got it? Now here's the thing. I highly recommend only using trailing stop loss with the trend continuation and trend line breakout setups. Mainly because both setups deal with trends. How about the volatility breakout setup where you could be entering breakouts within ranges? How should you take your profits then? Fixed target profit. When it comes to taking fixed target profits, being able to identify support and resistance is important. Why? Because it tells you where potential buying or selling pressure is. Let me give you an example. Assuming you're about to enter a buying position from a volatility breakout setup, the first thing that you need to ask yourself is, where could potential sellers come in? So, what do? You figure out where the nearest resistance is. Now, what's the point of plotting out the nearest resistance? To determine where your take profit is, of course. As you can see, you must set your take profits below the area of potential sellers. Because there are times when the price just sniffs your target profit level and then reverses against you. Sounds familiar, right? So, to wrap this guide up, let's have a quick recap, shall we? And in the end, I'm sure you've noticed, every single chapter in this video training is connected to form a trading strategy that will allow you to trade different types of breakouts. However, while most of the charts you see are cherry-picked and winning trades, you still need to do the work by testing it yourself first and making the necessary tweaks according to your needs. Because in this trading business, there will always be losses along the way. Makes sense? Now here's what I want to know. How do you go about trading breakouts? Do you currently trade some of these types of breakouts? Let me know in the comments below. And if you are looking for the best user-friendly and reliable brokers to start a trading, in the description below the video, I have put the link of some famous and reliable brokers for you. You can open an account in any of them for free right now. And then create a free demo account with virtual money and familiarize yourself with the environment of the trading platform and practice. Note that these brokers do not accept users from Canada and the United States. If you're enjoyed from this video, please like video, Write comment and subscribe to my channel so you don't miss the next tutorials.